AMC stock has been in the red, well, 10 out of the last 11 days. Today is no different. AMC stock down about 4.5%. Let's go over what's happening today and what you need to know, ultimately why AMC stock is falling today. So first and foremost, the risk of dilution. That's going to be the bottom line answer. Any day AMC stock is down. That is a part of it, okay? Silence from Adam Aron is all we get these days. Nothing. There's been no true announcements recently. There's been no, obviously, commitment to not diluting shareholders. Just a whole lot of nothing. And you can look at Adam Aron's X account for that matter, and really pretty inactive these days. Not a whole lot going on. And what he does say is pretty irrelevant anyways in regards to specifically AMC stock. Now, 10-year treasury yields also up about 9.5 basis points today. Not exactly fantastic for markets. 2-year treasuries up about 8 basis points. So it does look like the 2 and 10 yield curves are uninverting a little bit more as well today. Let's go ahead and take a look at exactly where that is. It still says 18 basis points. It has not been updated as of right now. So we'll definitely want to see where that does go. For whatever reason, it hasn't been updated. I believe it will get updated today, or at least it should, and you're gonna see, well, an uninversion of the 2 and 10 yield curves. Yet again, the 2-year yield at 4.22%, the 10-year yield is at 4.04%. So when the 2-year falls under the 10-year, then you're going to have a positive yield curve, and that is when you really start on your recession watch. Now, other than that, it does look like Trump won the Republican Iowa consensus. Is that what it's called? I don't even know. Consensus. Yeah, I think it's called consensus. Either way, he won that, and it did look like the future sold off a little bit on that, at least initially. But, you know, that's definitely not what's causing today. The VIX up about 4.23%. The Russell 2000, the big loser today, down about 0.75%. The Dow is down 0.5%. S&P is down 0.33%, and the NASDAQ down 0.25. It's the caucus. It's the Iowa caucus. There, that's the word I was thinking of. So yeah, overall, not a pretty day for markets. Taking a look at what markets are currently expecting for GDP for Q4, that's still sitting at 2.2%. We will get another update coming out tomorrow when we get retail sales data. Now, as far as Fed policy, we're currently pricing in, let's go ahead and refresh this just a little bit. Currently pricing in 66.5% for your first rate cut coming in March. So we are still pricing in the first rate cut for March. For the entirety of 2024, it's getting pretty close, but we're still pricing in 1, 2, 3, 4, 5, 6, 7 rate cuts, and 6 rate cuts is right behind it. 7 rate cuts as well. The odds of that has jumped a lot over the past week from less than 1% currently to about 12.5%. So nobody really knows a lot. I will tell you, though, if the markets are still pricing in 7 rate cuts by January 31st, we're probably going to get quite a large down move coming from the Fed on January 31st, because Powell's not going to let that slide. Powell's going to tell the markets firmly, we're not going to cut rates 7 times. If we do, it's because we're in a recession. Right? And the markets are not going to like hearing that as well. We did have a Fed speaker today. That's one of the big themes of this week. We have 6 or 7 different Fed speakers. Some of them speak multiple times throughout the week. And Fed Waller, well, his turn was today. Fed Waller says 4% wage growth is a little high, but not by much. It is reasonable to consider slowing the asset runoff this year. He also says once the Fed decides to cut, we can take our time with the pace. The setting of policy needs to be preceded with more caution to avoid over-tightening. So far, it's a little good and bad. It's a little on the dovish, little on the bearish side. He says financial conditions remain restrictive and rate cuts should be done methodically and carefully. There's no reason to cut as quickly as in the past, and the view is consistent This view is consistent with Fed policymakers' projections for 325 basis point rate cuts in 2024. So yeah, there was definitely some good things and some bad things said. Overall, it did kind of push back in the narrative of 7 rate cuts, and that's another reason why markets could be coming down at the time of recording this video. Now, again, that's what's going on in the broader markets. We are gearing up for more earnings. We did get Goldman Sachs, Morgan Stanley, PNC that reported earnings today. Overall, earnings were decent. Nothing that was really terrible. And that's what you want to be watching for right now is bad earnings are going to get destroyed, and good earnings, well, they won't. They won't get destroyed, but they probably aren't going to, do too much to the upside. I think just given where the markets are at, that's unfortunate about this earnings season. The odds of a fall on earnings are going to be potentially a lot greater than a rise, just because that forward-looking kind of 2024 guidance as a whole, that's when right now a lot of companies start giving that out, and expectations are very high right now. So you have to come in even higher than high expectations, and that just doesn't look that likely to me. So you do have some earnings this week, something to definitely keep in mind. The economic data is going to be the big story. You do have economic data for retail sales coming out tomorrow. We'll go over the exact expectations, but there's going to be a lot of Fed speakers basically every single day as well. So between retail sales and the Michigan Consumer Sentiment Survey on Friday, a lot of our market movement is going to be from those Fed speakers. Now, if we take a look here at the Ortex data, let's take a look today at the option activity. So far, you do have 7 different orders totaling $356,000 with a positive order value of 0%. If you take a look at the call side, volume is about 78% calls, 22.26% puts. So definitely a large ratio of calls compared to puts today. A lot more people buying calls than puts, at least on the retail side. On the hedge fund institutional side, not as much. Definitely a little bit more bearish activity over there. Now, if we take a look here at these short interest numbers, keep in mind, I think all of these numbers are wrong. I think the short interest in AMC stock is likely over 100%, could be higher than 200 or 300%. In my personal opinion, I have no way to prove that or quantify that. That is just my personal opinion based on what I've seen and watched with AMC stock over the past, couple of years. Ortex's estimates for short interest at 9.22%. If that theoretically was correct, that still is quite a large jump from what we've seen recently. In the first week of January at about 7.95% short interest. So you are definitely starting to rise again either way. Why that is potentially because the short positions are about to get exposed. Maybe some of those are getting exposed, if you will, or we're getting, reflected some of those numbers. I don't really have a good answer for that, but it wouldn't surprise me if the short interest continues to increase, especially as AMC stock continues to fall. Now, you do have $106 million worth of short positions currently in AMC stock. Days to cover 1.2, 23.09 million shares that are currently sold short. Shares out on loan 17.68 million. Cost to borrow 1.09, 29.65% utilization, and a 54.25 out of 100 for the short score. Cost to borrow fees across the board in the ones. Cost to borrow max at 1.9% and cost to borrow average at 1.22%. So there you have that. If you look at the Stock O Tracker data, this is a short week, so that's a little unfortunate because you have a lot of option activity for this week. If you see calls in the money, about 1,200. Calls out the money, 240,000. Puts in the money, 102,000. Puts out the money, 40,000. So there is a lot of option activity on both sides here. So if you do get, a reason to move, the move could be a little bit larger this week. But I mean, what we've typically seen from large expirations is you usually don't move that much, believe it or not. The large expirations are usually when AMC stock does very little. Taking a look at the percentage of stocks above their 50-day moving average today, that is really falling today, about 9.25%. You're now down to 64.14%. Although the SPY is pretty much sitting at all-time highs, you are seeing a big divergence where, the big cap names are doing very well and your average stock is not doing that well as of right now. 65% of stocks above their 50-day moving average. Well, that's pretty much where you were at in June and July, and even for May for some parts. So it's not like a really good ratio here. Starting to look a little bit ugly. If big tech gives it up and we start to see some selling in big tech, that's where you could see, potentially substantially more downside in our broader markets. And again, the latest AI investor sentiment survey that we do have, pretty much the same as the last one: 48.6% bullish, 27.2% neutral, and 24.2% bearish. I do think the bears are definitely going to pick up in the next report that comes out this week, so stay tuned to the channel for that one. Besides that, we really didn't have much for economic data. There was not a lot going on. We did have inflation rates out of Canada. If we go ahead and refresh this, you did have inflation come in line broadly with expectations over in Canada, so nothing too crazy there. New York Empire State Manufacturing Index just plummeted, though, down 43.7. That is the largest drop that we have seen in a very long time. That is the largest fall I believe we've seen ever, besides the Rona. Yeah, even during like 08, you were never this low. So things are definitely not peaches and roses out there in the economy, that's for sure. And that could be another reason why stocks are also selling down today. Probably should have mentioned that in the beginning of this video, but hey, for those of you guys that are watching now, you get that information. Yeah, that's a rough number. The estimate was -5, so you came in at -43.7. Whew. That is on the rough side for sure. So let me know what you think about this information down below in the comment section. AMC stock getting absolutely beaten up, still almost down 5% to $4.35 per share. You have been read so much recently. Again, it's due to what's going on in the broader markets and the fears of dilution for AMC specifically. It's just a really bad combo right now for AMC stock. And, I wouldn't be surprised if AMC goes to about $4 per share this week, kind of finds some support around there. I'm not expecting some kind of big rally anytime soon for AMC unless we get a commitment that we will not see dilution. And that's unfortunate. I get it. But I don't think the market conditions are going to improve for small and mid-cap stocks until probably the second half of this year. And commitment to not diluting shareholders, I don't know when the heck that's going to happen, just because it hasn't happened yet. It should have already happened. We shouldn't have ever got the last round of dilution we did following AMC's earnings, but that also happened as well. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.